Welcome back to Dukascopy TV. I'm Elaine Stenson. I'm joined in the studio now by Thomas Wilson, who's CEO and founder of SIRIUS Commodities here in Geneva. He's joining me now to discuss gold. So Thomas, you're very welcome.
Thank you for having me back.
What was the overall picture of gold last year?
Gold had a very disappointing year, dropping from 1,700 to 1,200. A lot of investors did not expect this move and therefore got caught initially. I think towards the second half, people had understood what was going on. There was a lot of intervention by certain banks, especially in the States, wishing to cap the market. And we saw more intervention probably than was described in the press. This move did not necessarily reflect what we saw in the physical part of the market, which is what I really concentrate on. And throughout the year, we saw very strong physical demand. As people were pulling out of paper trading, they were moving systematically into the physical part. And that is something that I see continuing throughout this year and actually the foreseeable future.
Okay, and there were no surprises from the Fed meeting on Wednesday. But how did this affect the price of gold?
Well, as we spoke before, the price dropped 1%, but such moves are not significant in today's market. Anything above 3% might trigger a few reactions. 5% plus is actually a real move, but in commodities today, 1% is not a surprise at all. So I think that the Fed's decision, which was unanimous, clearly demonstrates that the market was expecting this. And nothing happened to surprise any of us.
Okay, and some analysts are saying that demand for gold in China is fading. Are you concerned about this?
Not at all, and in fact I would question that statement and the people who believe that. We continue to see a physical demand out of China that is very strong and continues to grow. I think China has taken the #1 spot as the physical buyer in the world. It used to be India. India is probably the one country we have to look at which has dropped in demand. But China, I see that growing and continuing to grow, whether it's through jewelry or investment. And I stay very bullish as far as China is concerned and their desire to accumulate gold for the foreseeable future.
Okay, and what's your overall outlook for gold for 2014?
Well, this year is going to be a lot easier than last year. Last year I remained friendly, I was bullish, and clearly people will say I was wrong. But this year, when the price drops to $1,200 or now $1,245, it is much easier to say, and I continue to say that I'm very friendly. The price cannot really drop much lower. I mean, banks have talked about seeing a drop to $1,000. However, a lot of mines are starting to struggle at this price level and are losing money. And therefore, production will suffer if the price drops further. And therefore, I see gold actually climbing. I see demand stronger than ever. We have physical demand that is quite exceptional. And I am extremely bullish, and I wouldn't be surprised to see the price go right back up to where we saw it at the beginning of 2013 and actually go even higher than that price.
Really? And what other precious metals are you bullish on if you're so bullish on gold?
I've always been friendly towards silver. I think silver is an interesting metal. It's something somewhere between a precious metal and a base metal. It's something that's used very much in industry. There are a lot of applications for silver, and I think there is a real problem today when you see that base metals are weak, and therefore the byproduct side of base metals being silver in many cases that has disappeared. That means that supply is short, demand is strong, and I can see silver actually really surprising the world and going much higher in 2014 and especially in 2015.
Okay, and any thoughts on palladium?
Palladium, not so much. I think palladium is something that suffers a little bit. It's the bad sort of brother of the family. It gets overshadowed by platinum. Demand for palladium will continue to be strong. It became obviously a substitute for platinum. Every time platinum rallies too strongly, it gets used even more. That will continue. So by definition, through supply and demand, palladium has to continue to grow and increase in price. But I don't think that investors see palladium as a product they wish to invest in as much as platinum, gold or silver, and therefore it is purely an industrial demand that actually makes an impact on its price rather than an investor demand that comes in and affects the other three metals.
Okay. Thomas, thank you very much for joining us today.
It's an absolute pleasure.
And that's all we have time for now, but do check back later for further updates and interviews from the Dukascopy TV team. Bye for now.